Hey, what's up YouTube? This is Casey here. Welcome back. I just want to say real quick, if you haven't checked out my website, I just launched that a couple months ago. You can check it out at www.howtoplaystock.com. Just click the link here in the video, and you can go to my website. With that being said, though, I wanted to talk about creating your own print press. Now, you guys you're probably thinking, well, what are you talking about? You know, printing T-shirts? No, I'm not talking about printing T-shirts. What I'm talking about here is creating your own print press, becoming your own central bank. Okay, I think it's really important that you learn how to do this, especially when it comes to days like today. For instance, today's March 22nd, 2016, and for those of you who aren't aware, Brussels was attacked today in their airports by terrorists, and that creates fear in the markets. In the headlines, across the board, they've been talking about how people in Brussels are running to safe havens for investments and stuff like that because the stock markets are taking a hit out there in Brussels. Well, this is a global economy, guys. Okay, so if something happens in one country, more than likely it'll affect multiple countries. Okay, and when you have your money as an investor in the stock markets, and you're strictly invested in the stock markets, you're at risk. Okay, you're at risk of losing your money. You're at risk for losing your money anyways, whether you're invested in the stock market or not. I don't know if you guys realize that, but your money is, if you're hoarding cash, it's a safe bet. It's a safe way to go. Especially because when it comes to timing markets and just being in the right place at the right time, you can capitalize on that. You can make a lot of money, depending on the investment that you're in at that certain time frame. Okay, so holding on to cash is good, but long term it's not really a good thing to do because if you're familiar with the monetary system we're in here in the United States, it's the standard dollar system. And basically, if you're holding on to cash long term, you're going to lose it to inflation. I'll explain why real quick. And the reason for that is every time you go to a bank and you make a deposit, okay, the bank is allowed, they're required to keep 10% of that in reserve at their bank, but the other 90% of your money, it doesn't stay in the bank. It's lent out to other people in the form of a loan, okay, and then they make money on the interest from that loan, hence it creates money out of thin air. Okay, now you can, with that concept in mind, alright, that's how money is created. The more money in circulation, okay, in an economy, the less your dollars in your back pocket are worth. So, in time, with all this money circulating and with the Federal Reserve printing more money, what ends up happening is your purchasing power of the dollar in your back pocket goes down over time. And to prove that, all you have to do is just go to Google, do some research on the value of the dollar since the Federal Reserve was created, and look at how much the dollar has went down in value. Now the reason why that's important is because you don't want to hold on to just straight cash unless you have something short term that you're looking at getting into, and it has to be at the right place at the right time. And with that in mind, it's really important to invest in something. Because believe it or not, even if you're not invested in the stock market and you have, let's say, like a 401k plan, chances are you're going to lose money in that over time as well, because one thing's guaranteed, okay, and that's the law of gravity. In stock markets, what goes up must come down. Alright, and if you look through time, that's what you're going to find in stocks. They go up and down all the time. So you're going to lose money in your 401k, and if you're losing money in your 401k, you might want to be able to hedge against that and make some profits in those down markets. Okay, now what I'm talking about here is timing. It revolves around what I was just talking about with having cash, and being able to invest in something at the right place at the right time. What I'm doing right now is I'm actually doing an experiment. Starting out with $200. Okay, now last year I did this, and basically what I'm doing is day trading, guys. I'm playing volatility in the markets. Okay, last year, just to fill you in here, I was using a strategy playing volatility in the markets, and I had a 92% win rate. Okay, which is actually really good. The time that I lost, though, I did lose big, and a lot of that was because I broke my own rules. Okay, and I was playing with roughly about $10,000 to $15,000 on each trade. Now, this time around, I'm doing this strictly to show you how you can create money out of thin air. Okay, by placing bets with and against the markets, and I'm going to show you what tools I'm using to do that, as well as I'm going to post up live updates for the trades that I make on my website, www.howtoplaystock.com. I actually just made my first buy-in on a stock, so you can go to the website and check out the update that I made on that. Taking screenshots, it's pretty cool. I mean, it shows you pretty much what I'm doing right there, and it's updated, on a consistent basis. So you can kind of see what I'm talking about here and how it works, because it actually does work. Now, it doesn't work 100% of the time. There are times where you're going to lose some money. So I'm not telling you to quit your day job if you're planning on doing something like that, later on down the road for yourself. Don't quit your day job. Last year, that was one thing that I learned pretty quick, was when I was doing it, I was doing this, during a time where I lost my job. So I was doing it full time, and I was making a lot of trades. And as part of my risk management, and something that I learned from that whole process, was that you can't do this as a full-time job unless you have a serious amount of cash set aside. I'm talking about cash that you could live on without even day trading for probably a good couple years. So there was some money management issues I ran into, just because it doesn't really matter how much money you have. If the markets want to stay down, okay, and you're betting that they're going to go up, those markets could stay down until you run out of money. I mean, that's just being realistic. Okay, so that's why I say you want to make sure that you have some income coming in, maybe from like a part-time job while you're doing this, because you don't know how long those markets are going to stay down. Eventually they'll go up, but you can't predict 100% when that's going to happen when it comes to timing markets. The other thing is you want to have a long-term approach, a long-term investment plan going while you're doing this. I've got a traditional IRA set up. I've got a personal account set up already with some passive income coming in off of dividends. So this is something that I'm just playing around with because I can afford to do so. And that's exactly what you want to do if you're planning on doing something like this as well. Make sure that it's money that you can afford to lose. That's why I'm doing this with $200 this time and not $10,000 or $15,000, because I can afford to lose $200. It's not that big a deal if this thing goes belly up on me. So it's part of my risk management strategy. I'll cover more on risk management strategies later on in a different video, and I'll also post some risk management strategies within the topic of risk management on my website at a later date. But I just wanted to shoot this video and explain why I'm doing that and why you should probably become your own central bank, guys. Because believe it or not, there's a lot of stuff that we don't have control over when it comes to our investments, especially when you're putting it into the stock market. There's geopolitical moves being made by central banks, politicians, and all of that affects the value of your dollar. Especially when we're talking about like interest rates being hiked up or brought down. Those are forces within fundamental analysis that we just can't control. So you can actually capitalize on this though by playing volatility, and I'm talking about fear and greed. You know, Warren Buffett said in one of his speeches one time, and it's been famously quoted in some of his books he's written as well. He said, "Be fearful when other people are greedy, and be greedy when other people are fearful." Okay, so that's kind of the baseline for this strategy that I'm using here, and I'm using it again with a couple financial instruments. Again, go to my website, www.howtoplaystock.com. I'll show you exactly which one of those tools that I'm using for my strategy and day trading, and I'll keep you guys posted as this process plays out. I guess the goal here is to take $200, and I want to roughly turn that into about $5,000 to $10,000 over, say, the next 2 years. Okay, now it may be less than that, it may be more than that. I don't know. We're just gonna have to see how this plays out, because again, I'm playing. I'm trying to time the markets, and I'm trying to go off price movement. So those two things are really they're unpredictable a lot of times. I'm using some technical analysis and fundamental analysis as part of my strategy to kind of predict what the price ranges are going to be. So I've listed those out as well on my website. But anyways, I just wanted to show you guys and talk to you guys about why it would be important to have something, some type of an investment, either in tangible assets like gold and silver, or a strategy like what I'm using in volatility to fight these markets when they go down, so you're not losing all your money. Okay. Anyways, I'm gonna shoot some more videos here soon. I just got my iPad storage cleared not too long ago, so I'm gonna shoot some more videos on PE ratios, debt coverage ratios, and a lot of that would be geared towards finding, like undervalued stocks or growth dividend companies that you can invest in to create some passive income. Because guys, again, working a day job, a 9 to 5 day job, it's good, but it's not enough in today's economy. You're going to need something else. You want to get your money working for you in your sleep, okay? Because again, what we're fighting here in this monetary system with the monetary policy set up by central banks, what we're fighting is inflation ultimately, and a lot of that has to do with the value of your dollar being driven down by outside forces that you have no control over. So realistically, the safest thing to do would be to hedge some of your money. When I say hedge, I mean play in the financial tools like I'm talking about, or invest it in something that's going to go up when the markets go down, because you can make up some of the money that you've lost so that you can continue fighting this inflation, and you might even be able to outpace some of the inflation as well. Okay, you have a fighting chance. That's what I'm trying to get at here. You have a fighting chance. All right, so with that said, you guys have a good day, and I'll be sure to keep you updated on my live trades that I do. Alright, till then, you guys take care.